Imagine moving not just millions, but billions of dollars overnight. Executing a financial maneuver so precise, so massive, it sends shockwaves across global markets. What if that wasn't merely about personal gain for one, ultra-wealthy investor, but a powerful, undeniable signal for the entire crypto market? A seismic shift that could redefine narratives and maybe spark entirely new trends for assets like Ethereum. Welcome to the deep dive. This is where we cut through the noise, sift through mountains of data, and really try to distill the most important nuggets of knowledge to get to the core of what's really happening. And today, for you, our dedicated listener, who sent us this incredible stack of sources, thank you for that, by the way. We're plunging headfirst into a truly fascinating and, well, monumental shift in the crypto world. Your sources detail a colossal, multi-billion-dollar move by an ultra-wealthy Bitcoin whale, an entity whose actions are now echoing throughout the digital asset landscape, making everyone from institutional investors to individual traders really sit up and take notice.
Yeah, absolutely. And our mission for this deep dive, tailored specifically from your sources, is to unpack this precise, monumental transaction. We're talking about a reported $11 billion Bitcoin holders' decisive pivot into Ethereum. It's huge. We need to go beyond just the surface level numbers and really understand its broader systemic implications. We'll meticulously explore the why behind such a significant capital rotation, delving into the strategic rationale that would compel such a major player to make this kind of move. Then we'll dive into the what next, examining the immediate market impacts, the subtle but evolving institutional sentiment around altcoins, and what this might signal for the broader altcoin season. It's about more than just reporting on a trade. It's about trying to read the complex tea leaves of the market, right, to understand its future direction.
Absolutely. And to do that, we're going to break down the exact numbers involved, not just stating them, but really trying to illustrate their sheer scale for you. We'll look at the market's immediate, frankly, dramatic reactions and even connect this specific event to historical whale behavior, drawing parallels that might illuminate what could come next. By the end of this deep dive, you're going to have a unique sort of shortcut understanding of one of the most talked about and impactful movements in the crypto space right now. We'll equip you with insights that cut through the daily headlines and give you a, hopefully, deeper analytical perspective. So let's get into it. Okay, let's unpack this incredible story, starting with the main character, an ultra-wealthy Bitcoin whale. We're talking about an investor whose estimated total crypto holdings are, well, a staggering $11 billion. Just to put that into perspective for you, this isn't just a large player. This is an entity with enough capital to profoundly influence, if not outright move, entire markets. Their individual decisions are capable of sending ripples, or as we've seen in this case, maybe even tidal waves across the entire crypto ecosystem.
When an entity of this magnitude makes a move, the world of crypto kind of holds its breath and pays very close attention, right? Their actions are often seen as leading indicators, sort of setting trends rather than just following them.
What's truly fascinating here, I think, is not just the sheer scale of the capital involved, which frankly is mind-boggling, but the decisive and meticulously calculated nature of their actions. When someone with that much capital initiates a move of this magnitude, it is almost never impulsive. You just don't splash around billions on a whim. It reflects a deep conviction, perhaps born from an unparalleled level of proprietary research, maybe a sophisticated understanding of macroeconomic indicators, or possibly an advanced market read that most retail investors like us simply don't have access to. It's a meticulously planned and highly calculated strategy designed to capitalize on anticipated market dynamics. They're not just guessing, they are executing a finely tuned plan. This isn't a gamble, it's a strategic deployment of immense resources.
Yeah, exactly. And their initial action was truly significant, kind of a signal fire that immediately caught the market's attention. Our sources detail the whale's first decisive step, a massive divestment of 22,769 Bitcoin. At the time of this transaction, this substantial amount of Bitcoin was valued at approximately $2.6 billion. Think about that for a moment. $2.6 billion moved out of what many consider the bedrock, the digital gold, the undisputed king of crypto. There's such a significant divestment from Bitcoin immediately raises eyebrows, doesn't it? It signals a profound shift in perspective, forcing market participants to ask, why now and where's that money going?
Precisely. And this wasn't a slow, measured trickle of sales spread out over weeks or months, designed to minimize market impact. That's not what happened here. On the contrary, it was a significant offload executed in a relatively short period, which is a key detail. This kind of rapid, large volume divestment doesn't just grab market attention, it demands it. It suggests either a strong directional bias or maybe an urgent need to reallocate capital. It immediately poses the most critical question in the market. Is this capital moving out of crypto entirely, perhaps into fiat currency to secure profits? Or, and this is where it gets really interesting for us based on your sources, is it being aggressively redeployed into another digital asset, signaling a shift in where this whale sees future value and growth potential? The answer to that question, as we're seeing, often tells a comprehensive story in itself.
And here's where your sources and our deep dive truly uncover the plot twist. This whale didn't just cash out into fiat currency, disappearing from the crypto scene. No, they rotated directly, aggressively, and unequivocally into Ethereum. Specifically, our sources show they acquired a massive 472,920 spot ETH, which at the time of purchase was valued at around $2.2 billion. This isn't just a pivot, it's a bold statement of intent, wouldn't you say? A strong endorsement of Ethereum's immediate and maybe long-term potential. It's a deliberate repositioning of capital from Bitcoin to its closest rival.
But it wasn't just spot purchases. And this is crucial for understanding the sophistication of their strategy. It wasn't simply swapping one asset for another. To further underscore their confidence and amplify their exposure, they also opened a substantial $577 million ETH perpetual long position on Hyperliquid. Now, for those maybe unfamiliar with the mechanics of these high-stakes derivatives, an ETH perpetual long is essentially a leveraged bet on Ethereum's price going up. But unlike traditional futures contracts, it doesn't have an expiry date. It allows for continuous exposure as long as the position is maintained.
Right, and keeps the pressure on, potentially.
Exactly. And Hyperliquid, well, it's a prominent decentralized exchange, increasingly favored by institutional and whale-level players for these kinds of high-volume, highly liquid, and often leveraged trades. It's where the big fish swim these days. This dual approach, acquiring direct, unleveraged ownership through spot purchases and opening a significant leveraged bet on future price appreciation, speaks volumes about their conviction. Acquiring spot ETH gives them a foundational, long-term position, a direct ownership stake in Ethereum's fundamental value and ecosystem growth. That's their base. The perpetual long, on the other hand, amplifies that exposure significantly with borrowed capital. It allows them to capitalize on shorter-term price momentum with, relatively speaking, a fraction of the capital. Essentially, they're turning up the dial on their immediate conviction while maintaining that solid base of actual ETH. It's a multifaceted, high-conviction bet on Ethereum's upward trajectory. It demonstrates a belief not only in its long-term value, but also in its near-term price momentum. It's a comprehensive, almost all-in strategy on ETH, meticulously crafted for both immediate impact and sustained gain.
So if we take a step back, what does this all truly mean for us? For you, the everyday crypto enthusiast or investor trying to make sense of these monumental shifts, we're witnessing a clear, aggressive, multi-billion-dollar shift of capital from the undisputed king of crypto, Bitcoin, to its closest contender, Ethereum. It's not merely a trade, it's a strategic reallocation that has the undeniable potential to reshape market perceptions, influence future capital flows, and perhaps even redefine the hierarchy within the digital asset space for quite some time. It's a signal that demands our attention. You just can't ignore it. #tag the art of profit-taking and strategic accumulation. Now, this whale, as your sources so clearly highlight, isn't just about making bold multi-billion-dollar entries. They're also incredibly adept at securing profits and actively managing their positions with, well, almost surgical precision. Our sources reveal that after establishing those substantial long positions, they subsequently closed $450 million of the ETH perpetual long positions. This isn't about a passive investor just sitting back.
This demonstrates a sophisticated understanding of market timing, risk management, and that crucial skill of knowing precisely when to take some chips off the table, right?
Indeed. And this specific move occurred when ETH was trading around $4,735. That seems like a very strategic price point. This wasn't likely a reactive decision based on fear or greed. It suggests meticulous planning and execution that probably targeted specific technical levels or profit thresholds they'd set beforehand. It unequivocally demonstrates active, hands-on management of their portfolio, rather than a simple set-and-forget approach, which you might see with smaller players. This level of precision, where every basis point matters, is characteristic of institutional-grade trading. Timing can significantly impact overall returns, especially when you're operating with such colossal sums. It's about optimizing returns while de-risking a portion of the leveraged exposure. Smart play.
And this wasn't just about managing positions risk-wise. It was about locking in significant tangible gains. Hard cash, well, crypto cash. From those $450 million worth of closed long positions, the whale secured a cool $33 million in pure profit. That's an astonishing return from just a single segment of their overall trade, executed over a relatively short period. It just highlights the sheer scale of the capital they were operating with, where even a small percentage gain on that leverage translates into a truly massive dollar figure. It's really a testament to their market acumen.
Yeah, a $33 million profit from just one segment of their trade is, by any measure, a truly substantial return, especially when you consider the rapid timeline in which these types of leverage positions typically operate. It doesn't just validate their initial market read on Ethereum's immediate potential, it showcases their ability to execute a highly profitable strategy under pressure. It's a testament to their market insight and the immense power of well-timed high capital plays. It also provides fresh capital, right? Which, as we'll see, they didn't just let sit idle. Imagine the focus and precision required to pull off such a maneuver. It's definitely not for the faint of heart.
But the story, fascinatingly, doesn't end there, which makes it even more compelling for our deep dive today. After taking those impressive profits from their leveraged positions, the whale then deployed an additional $108 million directly into spot ETH. This is a crucial detail because it moves beyond mere profit-taking. It clearly shows continued unwavering belief in Ethereum's underlying value and its long-term potential, even after banking those short-term gains from the more speculative long positions. It's not just a hit and run, it's a recommitment, sort of a doubling down on their conviction in the asset itself.
Exactly. This isn't merely tactical short-term trading anymore. It's a profound commitment to the asset itself, to Ethereum's fundamental strength. Adding to their spot holdings after a highly profitable long position closure suggests a long-term conviction that extends far beyond just capturing immediate market volatility. It indicates they still see significant upside potential in holding the asset directly. Believing that Ethereum's fundamental utility, its robust ecosystem, and its role as a foundational layer for decentralized finance will continue to appreciate over time. This kind of reinvestment into spot assets they directly own without leverage, signals a deeply bullish long-term outlook. It reinforces the idea of a structural shift in their portfolio, not just a quick trade.
And the whale's activity, for us watching from the sidelines, isn't fully concluded. It's still playing out. Currently, our sources indicate they still hold a substantial 40,212 ETH in remaining long positions. And these positions are showing an impressive unrealized gain of over $11 million. So they're still very much in the game with significant skin in it, actively managing a live substantial bet.
Right, and this raises an important question for any astute market observer, and certainly for you, our listener. What might their next move be? With significant unrealized gains still on the table from those remaining longs, they have considerable flexibility, lots of options. Do they continue to hold, letting those positions run further, perhaps aiming for even higher targets? Will they deploy even more capital if market conditions remain favorable, signaling even stronger conviction? Or will they perhaps start scaling out if sentiment shifts, or if they see a more opportune entry elsewhere? This level of continuous, active management, coupled with the significant capital involved from a single entity, provides a powerful live indicator of market sentiment at the highest levels. It's like watching a master chess player make their moves, but with billions of dollars on the board, and every move has the potential to dictate the flow of the game for everyone else. It's quite something to observe. Hashtag market impacts and the sentiment shift.
So after this incredible sequence of events, the monumental Bitcoin dump, the massive Ethereum acquisition, the profitable long closures, and the subsequent spot reinvestments, what did the market actually do? How did it react? Well, our sources show that Ethereum surged nearly 25% in the wake of these moves. That's a truly significant jump for a major asset like ETH. It showcases an immediate and dramatic impact that reverberated across the entire crypto ecosystem. People noticed.
Oh, absolutely. This kind of rapid and pronounced price action, especially in a relatively short time frame, dramatically underscores the market's sensitivity to such large, well-timed capital movements. It created an immediate positive feedback loop for Ethereum. We saw not just the direct impact of the whale's buy orders hitting the order books, absorbing supply, but also a cascade of secondary effects. You likely had retail investors seeing the sudden surge, experiencing FOMO, fear of missing out, leading to a flurry of follow-on purchases.
Yeah, chasing the pump.
Exactly. And more importantly, we likely saw significant short squeezes. Traders betting against Ethereum were forced to buy back ETH to cover their positions as the price rocketed up, further fueling the upward momentum. This isn't just market psychology, it's a tangible chain reaction of interconnected market events that amplify the initial impulse from the whale.
Meanwhile, as Ethereum was surging, Bitcoin saw a contrasting decline of approximately 5.3% around the same period. This divergence, with one major asset rising significantly while the other falls, is quite telling, wouldn't you say? It really highlights the idea of a capital rotation rather than just a general crypto market uplift. It suggests a direct trade-off in investor preference, maybe.
Absolutely. It's a critical observation. This isn't merely one asset rising in a vacuum while everything else stays flat. No, it's another major asset declining simultaneously, which strongly suggests a direct, deliberate rotation of capital and sentiment. It points to a reevaluation by some significant market participants of where the next wave of growth might occur. While Bitcoin has held the crown for a long time as the primary store of value in crypto, this kind of rotation signals a growing belief among some sophisticated investors that Ethereum, with its robust ecosystem, smart contract capabilities, and burgeoning dApp economy, might be poised for a period of outperformance. It's a potential recalibration of the market's internal compass, moving away from just BTC dominance.
Analysts are certainly taking notice of these patterns, and your sources highlight this perfectly. Experts like Willy Woo, who's a highly respected and influential voice in crypto analysis, are directly tying these kinds of monumental moves to a broader, more structural shift from Bitcoin to Ethereum. So this isn't just about one whale making a smart trade. It's potentially part of a larger paradigm change in how market participants view these two titan cryptocurrencies.
Exactly. And what's truly fascinating here is the potential for this to be much more than just a short-term trade or a temporary reallocation of funds. If respected analysts like Willy Woo are indeed seeing this as a broader structural shift, it could have profound and long-lasting implications for the market's fundamental dynamics. This isn't just about price action, it's about a potential reframing of narratives. It raises the important question of whether Ethereum is beginning to genuinely challenge Bitcoin's previously unchallenged dominance in certain aspects, particularly as the store of value versus programmable money or digital oil discussions evolve. This reframing could attract an entirely new class of investors who are looking for growth assets with utility beyond just being digital gold. It suggests a growing maturity in the market, recognizing the distinct value propositions of both assets, not just lumping all crypto together. Hashtag macro tailwinds and altcoin season signals.
So, building on that concept of a potential structural shift, the big question on everyone's mind, and certainly a core part of your interest in this deep dive based on the sources you sent, is whether this specific whale shift is truly signaling a fundamental pivot towards Ethereum. Is this just a one-off, a singular opportunistic move, or is it maybe the tip of an iceberg indicative of a larger underlying trend that could reshape the market for months or even years to come?
Well, if we connect this to the bigger picture, many astute market watchers are indeed increasingly linking such significant capital movements, particularly when directed into Ethereum and other major altcoins, to a potential new altcoin cycle. That phenomenon often referred to as alt season, right?
Alt season, the time when everything but Bitcoin seems to pump.
Exactly. A structural pivot would imply a more permanent reallocation of value perception. It suggests that Ethereum's utility, its robust ecosystem, its critical role in DeFi, NFTs, layer 2s, all of that, is now fundamentally viewed as more attractive for future growth than Bitcoin's more established store of value narrative, at least by some sophisticated investors like this whale. Alt season, for those less familiar tuning in, is typically a period where altcoins significantly outperform Bitcoin, often driven by heavy capital flows seeking higher risk, higher reward opportunities after Bitcoin has had a strong run. This whale's move could very well be one of the early, powerful signals of such a cycle gaining serious momentum.
And it's not happening in a vacuum, which makes the case for a structural shift even stronger, doesn't it? This potential shift is powerfully reinforced by broader macroeconomic tailwinds. We're specifically talking about Fed dovishness here. For our listeners, maybe unpack that a bit. What are the specific indicators you're looking at from central banks that suggest a more accommodative monetary policy is reinforcing this crypto shift? And how does that historically translate into investor behavior, especially for riskier assets like altcoins?
That's a critical question because macro really matters here. When we talk about Fed dovishness, we're observing subtle but, I think, clear signals from central bank rhetoric and policy actions. We're seeing hints at plateauing interest rates, maybe even discussions of rate cuts down the line, a more cautious approach to quantitative tightening, or perhaps even a pause in it. Essentially, the money printer might not be off forever. Historically, when the cost of capital decreases and liquidity enters the traditional financial system, investors begin to seek higher yields beyond traditional savings or bonds. They have to put that money to work somewhere. They move from safe assets into risk-on plays. For crypto, this often means Bitcoin first, which acts as a sort of gateway drug for institutional money.
Yeah, the safe crypto.
Relatively speaking, yes. And then, often a cascade into altcoins like Ethereum. Because of their higher beta, they offer potentially higher, albeit riskier, returns. The narrative shifts from pure capital preservation to actively seeking growth, and Ethereum, with its active development, its utility, the merge narrative still playing out, fits that bill perfectly. It's a classic macroeconomic pattern playing out in a digital asset context. Cheaper money flows into riskier assets.
Okay, that makes sense. And furthermore, beyond just general macro conditions, your sources highlight tangible evidence in the form of ETF flows now actively favoring ETH ETFs. This institutional buy-in adds a significant layer of legitimacy, mainstream accessibility, and importantly, accessible capital for Ethereum. Historically, Bitcoin led the way with ETF adoption, garnering massive inflows. But Ethereum's increasing acceptance in this area, particularly with these recent record inflows mentioned in the sources, suggests something interesting. It suggests that traditional finance is also becoming more comfortable with Ethereum as a legitimate investable asset on its own merits, not just as a, side bet to Bitcoin's success.
Exactly.
This convergence of decisive whale activity, the supportive macro conditions of potential Fed dovishness, and growing institutional endorsement through ETFs, it paints a truly compelling picture for ETH, doesn't it?
It really does. It feels like multiple powerful forces are aligning.
This combination makes a strong case for a changing landscape. It feels like we're not just at an inflection point, but potentially at the dawn of a new era for crypto, where Ethereum steps into a much brighter spotlight, maybe even challenging BTC more directly. #tag deeper dive into capital flows and ETF dynamics. We've certainly seen the institutional appetite for crypto grow substantially over the past year or so. Bitcoin ETFs in particular gained significant inflows right after their launch, becoming a major conduit for traditional finance to get exposure. But your sources highlight a crucial and very interesting change in that dynamic, suggesting a shift in that institutional focus, perhaps.
Yeah, that's a key point. While Bitcoin ETFs continue to see robust interest and generally positive flows, especially from long-term holders and larger institutions perhaps making initial allocations, Ethereum ETFs have recently seen record inflows, particularly amidst these very macro events and whale moves we're discussing. This is a critical development because it clearly indicates a diversification of institutional interest beyond just Bitcoin. Institutions are not simply watching Ethereum from the sidelines anymore. They are actively seeking and allocating exposure. They're buying ETH ETFs. This reflects, I think, a growing confidence in Ethereum's ecosystem, its role in decentralized applications, the potential of future upgrades, and its overall future potential. This is a fundamental shift from the earlier Bitcoin-only institutional narrative, where Bitcoin was often the sole focus of crypto investment for many traditional funds. It means they're now seeing Ethereum as a distinct, valuable asset class in its own right.
Let's really try to visualize the numbers involved here for you, our listener, and how they portray this trend. Our sources suggest thinking about this with a clear, almost graphical comparison of recent inflows and outflows between BTC and ETH ETFs. This isn't just about new money broadly entering the overall crypto market, right? It's about discerning a conscious strategic rotation within the institutional crypto portfolio itself. Are they just adding ETH on top of their BTC, or are they actually selling some BTC to buy ETH? That's the key question.
That's the core question that makes this so insightful, yes. Are institutions merely adding ETH exposure as a separate supplementary allocation, viewing it as another diversifying asset within a broader portfolio? Or are some actively rebalancing their existing crypto portfolios, potentially reducing their BTC exposure in order to significantly increase their ETH holdings? The recent data, with its pronounced ETH ETF inflows often contrasting with some slowing in BTC or ETF growth, and even minor outflows from BTC ETFs on certain days, it strongly suggests a trend towards increased comfort and active investment in Ethereum at an institutional level. This shifts the narrative from pure speculative interest in the pioneer cryptocurrency Bitcoin to a more strategic, diversified asset allocation strategy within crypto itself. It signals a maturation of institutional crypto investment. Ethereum's unique value proposition, its utility, its potential for innovation are being recognized as distinct and compelling investment theses. Theses capable of attracting capital that might otherwise have gone solely to Bitcoin just a year or two ago. It's a sign of a more nuanced understanding of the crypto landscape emerging in traditional finance, finally.
Now, this isn't the first rodeo for massive whale moves shaking the markets, is it? And your sources bring up a critical historical case that serves as a powerful cautionary tale. Apparently, back in the day, a past Bitcoin whale sale sparked a flash crash across the broader crypto market, sent prices tumbling almost instantly. It serves as a powerful reminder that while these entities operate with sophisticated, calculated strategies, their sheer size can have unpredictable and sometimes devastating consequences for everyone else in the market.
Yeah, what's truly fascinating and often overlooked is that even when a large trade is impeccably calculated and strategically sound for the whale themselves, designed to optimize their own gains with minimal personal risk, it can still create significant market instability. It can cause intense volatility for everyone else trading on the public exchanges. These are not isolated events. They often have ripple effects that cascade through the market. They can trigger automated liquidations on leverage platforms, prompt panic selling from less informed investors who just see the price dropping fast, and often, paradoxically, create unexpected buying opportunities for those who can stay calm and navigate the chaos. For example, during that past flash crash you mentioned, the sheer volume of the whale sell orders just overwhelmed the market depth on exchanges. There weren't enough buyers instantly available. That triggered stop losses across the board, creating a downward spiral that took days, sometimes weeks, to fully stabilize. It highlights the systemic impact of concentrated wealth in these relatively nascent, often still quite illiquid markets compared to traditional finance.
This really underscores how even highly sophisticated, calculated large trades, despite their strategic intent, can lead to unpredictable, sometimes chaotic, market movements, especially given the amount of leverage often sloshing around in the crypto space. It's a stark reminder of the immense power concentrated in just a few hands and wallets within the digital asset ecosystem. It's like a supertanker making a sharp turn in a crowded harbor. It might be a perfectly planned maneuver for the tanker captain, but it inevitably creates huge waves and forces all the smaller boats to adjust course dramatically, or risk getting swamped.
That's a great analogy, and it provides crucial context for understanding the current whale move we're analyzing. While this one was a strategic rotation into ETH, suggesting bullish sentiment for Ethereum, the sheer scale of the funds involved means any future actions by this whale or similar entities with such significant holdings could again lead to dramatic market shifts, up or down. It highlights the inherent risk and volatility that are simply part of markets where such concentrated power exists. For you, the average investor listening, understanding this dynamic is absolutely key. Key to managing expectations, setting appropriate risk parameters for your own trades, and hopefully not getting caught completely off guard by these sudden shifts. It's a reminder that market signals from these behemoths need to be understood in the full context of their potential for both positive and negative impact on your portfolio. Hashtag visualizing the data. Verbal descriptions for the listener.
Okay, to really grasp the impact of what we've been discussing, let's try and paint a clear picture of the price action in your mind, visualizing the data you provided in those sources. Imagine looking at a one-month chart, maybe on TradingView or a similar platform, showing both Bitcoin and Ethereum side by side. You'd clearly see Ethereum's impressive 25% gain over that period, a sharp, distinct upward trajectory, almost like a rocket launch taking off from the baseline. Now, contrast that with Bitcoin's roughly 5% drop over the same 30-day time frame. That would look like a gentle but noticeable dip, maybe drifting slightly downwards. This visual divergence isn't subtle at all. It makes the capital rotation and the shifting sentiment incredibly clear. It almost screams the story of investors moving from one asset to the other during that period.
Exactly. And what's fascinating here is how quickly and decisively the market reacted to this shift. This isn't a slow-moving trend that gradually unwound over months. No, it's a pronounced and relatively rapid break from previous correlations between the two largest cryptocurrencies. Historically, Bitcoin and Ethereum often moved somewhat in tandem, right? If Bitcoin went up, ETH usually followed, maybe with a bit more volatility.
Yeah, usually a high correlation.
Right. This distinct divergence indicates a strong, independent upward momentum for Ethereum. Largely driven, it seems, by this specific whale action and the broader positive sentiment it helped catalyze. The market responded almost immediately to this signal, perceiving it as a strong endorsement that justified a rapid repricing of ETH relative to BTC. It was a very clear signal.
Okay, now let's break down the sheer volume of money involved in this whale's intricate multi-stage strategy, step by step, helping you trace the journey of these billions based on your sources. The journey started with that enormous $2.6 billion Bitcoin dump, selling BTC. That capital then flowed directly into acquiring approximately $2.2 billion worth of spot Ethereum, buying actual ETH, giving them foundational ownership. But it wasn't just spot, remember. An additional $577 million was committed to a perpetual long position on Hyperliquid, amplifying their conviction with strategic leverage, betting on the price going up further.
Right. Then a portion of those leveraged positions, specifically $450 million worth, were strategically closed for that significant profit we talked about. That happened when ETH hit that key price point of around $4,735, taking some risk off the table. And finally, after shrewdly taking those gains, an additional $108 million was deployed back into spot Ethereum. reinforcing their long-term conviction and deepening their direct stake in the underlying asset. This complex ballet of billions illustrates a highly sophisticated, multi-stage strategy. It's not a simple, impulsive buy or sell. It's a masterclass in market timing, risk management, and capital deployment. It showcases an investor who is clearly thinking several moves ahead, managing their exposure and optimizing returns at every single turn. It's like a financial symphony, if you will, played out on the blockchain. Very impressive execution.
And your sources also help us track the whale's ongoing position, which is fascinating. It gives us a real-time pulse on their continued market conviction. It's not over yet. Currently, they still hold substantial long positions at 40,212 ETH we mentioned earlier. And these remaining holdings are showing an impressive unrealized gain of over $11 million. This isn't just a historical event we're dissecting. It's an ongoing, active play, a live experiment in market influence.
Exactly. And this detail is crucial because it implies significant future optionality for the whale. They have choices. With such a substantial unrealized profit already booked on paper, this entity has considerable flexibility. They could choose to let those positions run even further, maybe scaling out more gradually if the uptrend continues, capture more profit. Or they could potentially redeploy that capital again, maybe into other altcoins if they see alt season broadening, or even back into Bitcoin if their thesis changes again, creating further ripples in the market. Perhaps they'll even use these unrealized profits as collateral to add more leverage, or just use the eventual realized profits to add to their spot ETH holdings once more. This remaining position is effectively a live indicator of their continued conviction in Ethereum, at least for now, and any future adjustments they make could create further ripples, providing powerful signals for us all to watch. It's not just a snapshot, it's a dynamic, evolving strategy that we get a glimpse into. #tag listener engagement and critical questions.
Okay, here's where it gets really interesting for you, our listener, bringing all these complex pieces together. We've laid out the facts from your sources, the context, the potential implications. Major whale flows don't just move markets randomly. They reflect deeply held confidence levels from players with significant skin in the game, serious skin in the game. These are not small speculative bets made on a whim. These are strategic, multi-billion-dollar allocations that speak volumes about where these influential players believe the market is heading. They're putting their money where their mouth is, big time.
Yeah, a monumental shift from Bitcoin to Ethereum from such a dominant player, moving billions of dollars. It could very well indicate a deeper structural belief in Ethereum's long-term growth trajectory. It's a powerful vote of confidence in its utility as a foundational layer for decentralized applications, its active development roadmap, and its potential to capture an even larger share of the crypto market's overall value in the future. This goes beyond mere speculation about price. It suggests a belief in fundamental value and a strategic positioning for the next wave of innovation in digital assets, much of which is being built on Ethereum. It implies a recognition that Ethereum has evolved into a technological powerhouse in its own right, not just digital silver to Bitcoin's digital gold.
So now, we want to hear directly from you. Considering everything we've just unpacked today, all the details from your excellent sources, would you interpret a whale moving $2 billion plus from Bitcoin to Ethereum as a smart, opportunistic pivot, capitalizing on new growth opportunities in the ETH ecosystem? Or, conversely, do you see it as a potentially risky bet on altcoins, moving away from the established perceived safety and dominance of Bitcoin, especially as a long-term store of value? There are strong, valid arguments for both sides, and we're genuinely curious about your perspective. What does your gut tell you?
And let's get practical for a moment, maybe put you right in the whale's expensive shoes. If you suddenly found yourself with an additional $108 million worth of spot ETH in your wallet, reflecting the whale's reinvestment after taking profits, what would you personally do with it? Would you simply HODL? Just hold on to it for long-term appreciation, believing in Ethereum's distant future, maybe staking it passively?
Set it and forget it.
Maybe. Or would you stake it actively, trying to maximize yield, contributing to the network's security and earning rewards? Or would you try to actively trade it, seeking to capture even more gains from market movements, perhaps releveraging, diversifying into other tokens on Ethereum, or timing exits and entries? Your answer might reveal your own underlying conviction in Ethereum's future and, importantly, your personal risk appetite. It's different for everyone.
And finally, the million-dollar question, maybe the billion-dollar question in this case, the one that ties into the very core of what you wanted to explore in this deep dive. Is Ethereum truly entering a new era of dominance? Is its utility and ecosystem value beginning to genuinely eclipse Bitcoin's pure store of value narrative in the eyes of big money? Did that whale just confirm that alt season is indeed upon us, providing the definitive catalyst we've been waiting for? Or is this just one particularly large, incredibly shrewd investor making a calculated bet that others might not universally follow? Maybe they just got lucky or have information we don't. What stands out to you most from this deep dive into the whale's colossal pivot? What lasting insight will you take away from understanding this massive capital flow? Hashtag tag outro. Wow, what a deep dive. We've really peeled back the layers on one of the most significant capital rotations in recent crypto history, meticulously analyzing the movements of billions of dollars based on your source material. This whale's monumental pivot from Bitcoin to Ethereum is clearly more than just a series of numbers on a blockchain explorer.
It's a potential harbinger of shifting narratives, evolving market dynamics, and a strong signal for the future direction and relative valuations of digital assets. We sincerely hope this is giving you that essential insight into this monumental market shift you are looking for.
It definitely raises an important question for us all to consider as we look ahead. What does this pattern of mega investor rotation tell us about the evolving narrative of digital assets, especially those beyond just Bitcoin? What does it say about the maturation of the market? And maybe more importantly, what might be the next unexpected pivot that could redefine the crypto landscape? What subtle signals should we, as astute observers trying to navigate this space, be watching for to anticipate these profound shifts before they happen? Something truly thought-provoking for you to mull over as you continue to navigate this dynamic and often unpredictable market.
Absolutely. And if this deep dive has sparked further questions for your portfolio strategy, or if there's another complex crypto topic you'd like us to unravel using your own curated sources, please do send us your notes. Let us know what you're thinking about. We build these deep dives specifically for you, our listeners. Your engagement things like liking the video if you're watching, subscribing to the channel, hitting that notification bell, leaving comments with your thoughts or questions. It directly helps us continue delivering this kind of personalized, high-impact analysis. It really helps support the channel, boosts our visibility in the algorithm so others can find this information too, and lets us keep creating quality crypto content tailored to what you want to understand. So thank you for that support. Thank you for joining us for this deep dive. We'll be back soon with another stack of sources to unpack, bringing you the most important nuggets of knowledge from the world of crypto.